Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
Fed day, big day.
Yep, great day.
It seems mostly flat. I mean, tell us what happened. No hike, no cut.
Correct. Basically Powell reiterated his stance that there's too much uncertainty in terms of economic policy, tariff policy, and the path of the overall economy to either hike or cut rates, or to give meaningful kind of forward guidance about what's likely to happen on a go forward.
Yeah.
Long story short, there's a lot of uncertainty. They're going to be data dependent. That was the message. It was pretty clean, well received by the market. We really didn't move up or down on his Q&A session. I think that's probably the appropriate policy stance at the moment, simply because there's been some constructive developments on the tariff side of things. Yesterday, there was a headline that the UK is really close to signing a deal. Today, we got some AI restrictions lifted for the Middle East so that they can buy some of the higher-end GPUs, from U.S. chip makers. And you had the meeting with Carney yesterday in the White House that seemed productive. And so it does seem like the trade stuff, with the exception of China, is going in a pathway that inspires a little bit more confidence than, kind of where we were at last week or the week prior.
And China, President Trump reiterated today that he wasn't going to lower the, 145% tariff?
Correct. And he also stated that they reached out to him, not the other way around. And so, there's a little bit of
brinksmanship.
Correct.
Yeah. So, I mean, as to be expected,
yeah,
I'd say still, I wouldn't say positive. That's the big one to watch, right? U.S. and China, number one and number two economy.
Yep.
Some talk about talks, not talks being held yet, but feels like we're in a slightly more productive space than we were like 2 weeks ago on U.S.-China.
Yeah.
Ish?
Ish.
Yeah, ish.
Ish.
Did they say something? Didn't they say something like they would
said
meet?
They were considering meeting, and then now meetings have been scheduled for Saturday.
All right, that's something.
Yeah, but they're very far apart.
Yeah.
It's like, Besson said that it could take 2 to 3 years to get a trade deal done with China.
Yeah.
Now, the question is, how long does it take for us to de-escalate, right? And, that might be shorter. And how long till Trump just throws in the towel and just kind of sets rates? Yeah. I think that's kind of going to be a function of how much pain he's willing to withstand if the real kind of trade slowdown starts to affect people and prices in particular. And so, the U.S. has pretty strong tolerance for pain, and so does Trump. So it might be a really long time before he kind of just throws in the towel on negotiating. So we'll see. It's an interesting setup. Right now it seems like animal spirits are a little bit back in the markets. We've seen a lot of equity tech names, really do well, except today you had a pretty big fall in one of the Mag 7 names due to a slowdown in kind of traditional search. And given the move that's going to happen over time to
AI-driven, rather than searching the internet for a web page that has the answer, people are just asking AI now for the answer.
Correct.
Right? Yeah.
That's
and the AI, while it may use a search engine, it doesn't show the ads from the search engine to the end user.
Yeah.
Yeah.
So that's a pretty big deal for folks that are in the search engine business, mainly Google, right? And they were down like 8% plus.
It's interesting. I mean, I think,
it's not a shocker.
I have started asking ChatGPT rather than just Googling stuff.
I'm on Perplexity all day.
Yeah.
I'm like, oh, what is this? What is that?
Yeah. I was actually asking it to make some ASCII text art, like where it's just using the characters. It's not there yet, by the way. But again, like just random questions, thoughts, asked it for a synonym or to a word earlier today, rather than going to thesaurus.com, or whatever. So there is a clear...
And it's got humor, too. I ask it, write me a witty, funny line about this.
Yeah.
So,
full disclosure, we are not AI writing any scripts for this show. You're getting the raw, unscripted Beimnet and Alex discussion. What about just equities in general? I mean, we've been having a great week. Obviously, we talked about this last week, a great few weeks, I should say. We talked about this last week that U.S. equities went on this great run, a tear of some with the most consecutive green days and
9 sessions in a row,
50 years or something like that. And obviously Bitcoin. You were bearish on Bitcoin, a month ago, and it was bearish. It kind of really rocketed higher earlier in April. Now sitting here in the 96K area feels pretty comfy at this moment.
No, absolutely. I think as long as equities continue to hold up, I think Bitcoin will continue
Why
to trade
are
well.
equities holding up in general? People because the Liberation Day shock is worn off, and
I would largely say that's kind of the reasoning. I would tell you that the retail community has been incredibly active in the entire dip. Basically, net buyers on most days.
Yeah.
So retail has certainly bought the dip, and then you had a large portion of S&P companies as a portion of earnings report last week. Microsoft crushed it. Right, that's a huge index weighting. Bit more mixed results here and there, but yeah, it's retail, driving stuff up, and it's also like earnings haven't really been hit by tariffs yet.
Mm-hmm.
In fact, they've probably been helped because of how much front loading of activity has happened so
People
far.
are going and buying stuff
Yeah.
on the idea that it may be more expensive later.
Correct.
Yeah.
But high level, I mean, this market exists still in some form of like irrational exuberance, right? It doesn't trade on like valuations and fundamentals. You have a lot of high flying tech names that are very detached from like where a model might tell you
like
that
PE ratio is still very high across the board.
I mean, and maybe they're warranted because we're going to just remain in this irrational exuberant market because the Fed's going to keep policy pretty loose and the government's going to continue spending money, and people are going to still have their jobs, and so there's an argument that this exuberance in markets persists, right? But on the off chance it doesn't, like there's a lot of air for some of these companies, right? Like you take a look at a stock like Palantir, right? That trades at a 400 plus PE, and on a forward PE it's like 180, which puts it at one of the most insane companies in the world. Maybe that's justified. Who knows? But I do know that a PE of that magnitude,
it's an outlier.
It's an outlier.
And historically across the indexes, P ratios are historically elevated. They have been for a while.
They come off a lot, and they've rebounded since. But yeah, there's a lot of froth there. And then the other thing is like there's a tremendous amount of buyback activity in the equity market, right? All the big Mag 7 names essentially buy their stock back.
Right. Creates a constant bid.
Constant bid. And here's the thing, the supply of the stock, you're taking float off the market, right? And so if there's buy pressure with less float, that's going to take prices higher. And you've been doing that for the last 4 years. Like these companies have just been buying a ton of their stocks back. So you've got that dynamic, and retail has been paid to buy the dip since the financial crisis.
Yeah.
Every single dip.
And trained and paid. It's worked out. Yeah.
And so until something changes with retail, I struggle to see, stocks cracking in a meaningful way. But ultimately, like, we don't know what the tariff impact is going to be. Yeah. And there are plenty of signs of stress.
And that
in the economy.
Goods becoming more expensive reduces the purchasing power that retail has, right? I mean,
absolutely.
So once they actually sort of hit and product prices increase, we'll have to wait and see.
Absolutely. Savings rates are really low. You've got 11 million student loan borrowers that are now getting collected on, right? Like there are pockets of stress in the economy. I mean, all of the corporations in the U.S. that have lowered guidance or pushed it lower and have taken tariff related write-offs, right? You have commercial backed mortgage default rates ticking higher. You've got like home default rates ticking higher, credit card default rates ticking higher, right? So there are pockets of the economy where you're like, this is concerning. But again, when you put it in the context of 50% of consumption is really driven by the top 10% of income earners, right? Like those top 10% of income earners aren't really feeling the pinch yet.
Yeah, got it. That makes sense. All right, well, there it is. Big day, Fed day, Super Bowl, kind of a non-event at the moment, at least.
A low rating Super Bowl.
Low rating,
like a Rams one where they score like 3 points.
Yeah, it's a defense-driven game.
Defense,
yeah, big defensive game. All right, my friend Beimnet Abebe from Galaxy Trading, thank you so much.
Pleasure.